The Federal Reserve is expected to cut interest rates tomorrow for the first time, and this is everything that you need to know before it's actually released. What's going on, guys? It's Ricky, and let's go ahead and talk about all of the details. Yes, I will be hosting a free live stream tomorrow during the FOMC meeting at 2 p.m. Eastern Time. That's about 2 hours before the market closes, and that is when the first rate cut in the last 50 months is supposed to be announced. The question is not if they're going to be cutting rates, but by how much. Is it going to be by 25 basis points? Or by 50 basis points? That is the question that everyone is asking, and that will determine how the market reacts. Now, there's a second thing that I want to make sure that you understand. 30 minutes after that Fed rate cut is announced, Jerome Powell, this guy that you see right on over here, looking at the sky, or I guess hopefully maybe tomorrow's market, will be going live and answering analyst questions. This is where we will get a better understanding of how hawkish or how dovish the Federal Reserve is. Now, again, he always doesn't give the most amount of details for us to get a full understanding, but this is probably the most anticipated FOMC meeting, I want to say, of all of 2024, because it's finally happening. And again, I will be live streaming this for free on this YouTube channel. All I ask you to do is get this video to over 500 likes and make sure that you subscribe to the channel. Without further ado, I felt like this article did a beautiful job kind of breaking down the question that everyone is asking. It says the Federal Reserve is about to start cutting interest rates for the first time since 2020. Again, in over 50 months. But the big question looms. How far will they go? Again, will it be 25 basis points or 50 basis points? It won't be an easy call. For more than a year, the Fed has kept borrowing costs at the highest level in more than 2 decades. So again, because interest rates were so expensive, that's what they mean by borrowing costs. It's been very expensive to borrow money. Therefore, businesses and people like you and I have not been very encouraged to borrow money. Therefore, slowing down the economy. That has made it more expensive to get a car loan, finance a business, or carry a balance on a credit card, just like we explained, right? Now that the Fed has made it clear that it will be cutting interest rates, it will need to decide whether to opt for a modest 0.25% or a half point rate cut, or a more aggressive half a point rate cut. So again, that's just what we talked about. Is it going to be 25 basis points or 50 basis points? That is the question that everyone is asking. So that uncertainty has made this meeting the most highly anticipated in a while. And there's no question about that. This is the FOMC meeting that everyone has been waiting for, because originally, if you've been watching my channel for a while, or at least paying attention to the market, you would know that we thought that the Federal Reserve would possibly start cutting interest rates early 2024. It's September now. It's the end of 2024, and this is supposed to be the first time that the Federal Reserve actually cuts interest rates. So again, here are 3 things to know ahead of the Fed decision. Due out on Wednesday, again tomorrow, 2 p.m. Eastern Time, just like we talked about. And again, 30 minutes after, Jerome Powell will be going live and answering questions. What's at stake in the Fed meeting? The only certainty is that the central bank will be cutting interest rates. That's not a stop the press headline. Fed Jerome Powell telegraphed it nearly a month ago, and that is correct. It's the size of the rate cut that will remain in doubt. Again, we do not know if it's 25 or 50 basis points. It's a tough call. Inflation has fallen substantially. As many of you guys know, we went from 9.1% that we were back in June of 2022 to now 2.5%. So inflation is no longer really the main concern for the Federal Reserve. As many of you guys have heard Jerome Powell and a lot of other analysts talk about, it's the labor market, the job market. How is that doing? Because historically speaking, if we look at 2008, if we look at 2020, and if we look at just the year 2000, we can see that by the time the Federal Reserve started cutting interest rates, shortly after, not right away, but months after, we start seeing some weird reason that unemployment begins to climb. So that is something that I'm going to be paying very close attention to as the Federal Reserve begins to cut interest rates, to see if there's a correlation with higher unemployment. I'm hoping that there's not, but again, there has been in the past. And then shortly after that, we tend to enter a recession. So that's just a slight concern that I personally have. But again, it's just something that I'm going to be paying close attention to. At the same time, the US job market is starting to show more weakness. Hiring has slowed down and unemployment is inching up, hitting 4.2% last month. I wouldn't say that it's inching up because we actually went from 4.3 to 4.2%. But nonetheless, again, we are somewhat rising because we were in the threes, something to take into consideration. And then this is kind of the interest rate that we are currently sitting at. And we've been sitting at this since late 2023. You could see that we're pretty much at previous highs of what we were right before the recession. And then again, we entered the recession, and that's kind of a concerning part. This is the part that kind of concerns me. This is when we began to, if I'm not mistaken, this is the recession period for 2008, and this is the recession period for the dot-com bubble, if I'm not mistaken. So that's just kind of the concerning part. Anytime that we have record high interest, and then we start cutting interest rates, that's when we tend to enter a recession. And just like we showed you here, this is a little bit of a different example because this was the pandemic, the economy, or the world kind of closing, but we did somewhat enter a slight little flash recession. Again, I'm just showing you the data. You guys can make what you want out of it. It's just historically, it has been proven by that data that when inflation is this high and interest rates are this high, and we start cutting interest rates, we tend to see a downturn in our overall economy and an uptick on our overall labor market or unemployment rate. So all in all, the data is not pointing in a clear direction, meaning that the Fed could go either way. Some economists who worry about the labor market believe that the Fed should go bigger, delivering a 0.5% point cut, and others feel that the Fed could be more patient, starting with a 0.25%. So again, all opinions aside, everyone has their opinion on what they believe the Fed will do. What I think, and again, you guys can just pay attention. It's not what we think the Fed will do or what we hope the Fed will do. It's what they've shown us. And if you've paid attention to the Federal Reserve, they've been very considerate and very, let's look at the data and see what the data supports. They're not very aggressive in the way that they like to do things. So I don't think it would be much of a surprise if they only cut interest rates by 25 basis points, right? Now, if they wanted to be a little bit more aggressive due to that concern, then I think that would really surprise the market and potentially send the market flying. And quite frankly, I think that's what the market is kind of expecting. If you guys haven't heard the news when it comes down to what's to come for tomorrow, they are saying that the 25 basis point interest rate cut is already factored in. A 50-point rate cut would send the market to potentially new highs. So I'm really excited to be able to share this experience with you guys because I just want to see what the Federal Reserve actually announces and how the market actually reacts. Because this time I feel pretty prepared, right? When in doubt, never be afraid to cash out. And that's one thing that I'm super, super excited for right now, to be able to share with you guys that if market does go up, I'll go long with the bulls. If the market does go down, I'll go short with the bears. And we plan to capture this all live, not only during our live trading session tomorrow at Market Open, but also during that FOMC meeting, which of course I'd love to invite you to. And all I literally ask you to do is drop a thumbs up and subscribe. Also wanted to recap the day. Ended the day at $1,600 in the green. $1,600 in the red. And that is following my $6,000 green day yesterday. So again, you can't win them all. I showed you guys how much I was down in today's earlier video. I added a little bit more to it. But again, my job is not here to be perfect. My job is to simply manage and mitigate those red days. So other than that, I hope to see you for tomorrow's FOMC rate decision. And also I hope to see you for tomorrow's live trading session. Whenever you feel like you're ready to tune on in, that's that second link in the description down below. And I'll see you at Market Open. Like always, let's make sure that we end the year on a green note. Take care, team.